Equity Mates, from our mates at Spaceship. Investing made easy.
Welcome to another episode of Equity Mates, Wednesday here in the AusBiz studios, which only means one thing, and that is it's Watchlist Wednesday. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Great to be back for another Watchlist Wednesday, our
Yes.
favourite day of the week.
Yes.
We get to hear about 3 stocks on an expert investor's watch list. What more could you ask for?
Nothing. That's all we want. And it is our absolute pleasure to welcome back again to Equity Mates, Andrew Page. Andrew, welcome.
Thank you, Bryce. Yeah, good to be here, guys. How are we?
Very well. So Andrew, for those of you in the Equity Mates community who haven't come across him before, is the founder and managing director at strawman.com. He's appeared on our podcast and on AusBiz plenty of times. So go back and have a listen to some of the content we've done with Andrew, because he always has a lot of great things to say. And we're stoked that he's back to share 3 stocks on his watch list. And as Alec noted just before we went on air, that they're all in that microcap space. So looking forward to digging in. Andrew, first stock we may as well get stuck in is Envirosuite. Ticker is EVS. What is the company and what's the thesis?
Yeah, so Envirosuite, I've actually had a long, tumultuous history with this company. It's been on Strawman for quite a while. It's done me pretty well, about a 50% compound annual return over that period. But it is a small cap company, about $100 million in market cap, and it does sort of swing from like stupidly cheap to stupidly expensive. So I'm a very much a long-term holder here, but there has been some adjustments along the way with this one. And what's really interesting with this, and I'll get to what they do in a moment, is that they've really fallen out of favor of late. So I felt as though it was time to maybe shine a bit of a light on them. So these guys are environmental intelligence, environmental monitoring. So they connect up all these environmental sensors that are out there in the field that might detect things like odor or noise or vibration or dust, all kinds of different things. And they incorporate that all together to give their customers a real overview in terms of what's happening at their sites. So the kind of sites or the kind of customers that they have are things like mines and ports. More recently, airports are a very big part of what they do, thanks to a very large transaction at the start of last year. And it basically puts all of this together in a way that's, and I think this is the important thing, it's not just a descriptive thing in terms of what's happening with your sites, but it's also prescriptive and predictive as well. So a really good example here might be a mine that's thinking of doing some blasting. And if it lives anywhere near a local community, when you obviously blast a bunch of rock and dirt, it throws all this dust into the air and it can annoy a lot of people. And that can sort of harm your social license to operate. There can be regulatory considerations there, all kinds of things. So this kind of technology sort of helps you plan that, and also helps you keep an audit trail of everything that you've been doing as well, keep your regulators happy, but also not just in terms of doing good things, but actually helps improve the operational efficiency of your site. So it's a company that's sort of grown and changed rather rapidly over the years. They're doing that kind of stuff with water treatment plants and also with smart cities, also with ports, as I say. And they've got about 350 customers globally, and they're doing about $42 million in annual recurring revenue. So it's a company that is small, but hopefully will be much bigger in the future.
Yeah, nice.
Now, Andrew, you said you've had a tumultuous relationship with it, but you've had a 50% compound annual growth rate. So I think if I had a stock with a 50% compound annual growth rate, I wouldn't describe it as tumultuous, but hey, different strokes. We will move on to the next one though. Interested to hear what your relationship with this one is. Austco Healthcare, ASX ticker AHC. This one's even smaller, $34 million microcap. So for people who haven't heard of the company, what does it do? And then why do you like it?
Well, Alec, let me just quickly go back onto your last point here. So I think one of the things that I love about investing in the small end of town is that you get a lot of opportunity that it's not as highly scrutinized as the big end of town, but that comes at a price, and that price is usually some pretty extreme volatility. So, people can get super excited and things run up, and then it gets very, very scary and things fall down. So when I say that the history has been pretty tumultuous, I feel as though the business has kind of been doing some pretty good things. Always a few little hairs on these kinds of companies, but you've got to have a very clear idea of what a fair value is for these kinds of businesses, and sort of act appropriately around that. These are not the kind of companies that I think. And given their upside potential, you might, like as I did, I first bought some Envirosuite at 4 or 5 cents, and that get up to 30 cents. It's not so much about trying to sell and lock in winners or anything like that, but it becomes a very large part of your portfolio. So there's some sort of very sensible management that you need to do around that. So anyway, hopefully a little bit of extra context. Let's go back to Austco. Austco has actually had a bit of a name change not too long ago. This was formerly Azure. And before I go into this, I have to give a shout out to a strawman member called Winnie, or as others would know him, Luke Winchester, who's often on AusBiz. I think he may have spoken to you guys before. Really smart investor. He popped this on Strawman, which prompted me to have a look. And the more I've looked, the more I've liked it. So what these guys do are nurse call systems. So if you've ever been into a hospital, you'll know that there's a button besides the bed, which will get the nurse to come along. Now, that technology has come a long way. A lot of hospitals haven't kept pace with what the technology can do, and herein lies the opportunity. So it's really cool in terms of they can actually track where patients and nursing staff are around a hospital, also, should I say, nursing homes as well. And they can really just improve the standard of care, the operational efficiency, et cetera, et cetera. So it's a business that has actually had a real knock around with COVID. They've been winning lots of sales, but you can't actually implement that when there's a lot of restrictions around hospitals, and there's a lot of restrictions around nursing homes as well. So their results took a bit of a knock there, but in the background, they've actually been winning a lot of work. And what was interesting, this is very fortuitous, it wasn't planned, but they actually had an announcement today saying that they won a big new contract with a hospital over in Singapore. And for those that don't know, Singapore has like world-class hospitals and healthcare system. It really is, top 5 systems in the world. And one of their big networks over there is big 800-bed hospitals taken on one of their systems, which is really great. And interestingly enough about this company too, it's a profitable company, about $30 million in sales and about $3 million in net profit as well. No debt, $6 million in cash, high inside ownership, long runway for growth here as well. And what's really interesting about this is that when you talk about sort of technology companies, when you talk about growth companies, these days in particular, you're talking about stratospheric price earnings ratios. And often there's not a price earnings ratio because they're not profitable yet. So it's a price to sales ratio that you have to use. Well, these guys are profitable, as I mentioned, and they're on a PE of 11, which is really low. Now, I should stress that for very small microcap companies, they don't often demand the same kind of premium as their bigger peers because the liquidity there just makes it harder for people to get in and out, and that it does dampen the premium. So perhaps we shouldn't expect them to trade on the same kind of premiums as an equivalent company with equivalent growth would be if it was much larger. Nevertheless, it seems as though it's a business that's executing well, big fat sales pipeline, a big market opportunity, some traction, and I think once they start getting access to some of their customers again and they can start implementing a lot of these sites, I think we'll continue to see sales and earnings grow quite strongly. So one to watch.
Andrew, it's pretty clear that there are a lot of things that excite you about Austco Healthcare, so certainly put that one on the watch list. To close out, your third stock, Ava Risk Group, ticker AVA. Again, what is the company here and what's the thesis?
Yeah, we've covered ground here. So sort of environmental intelligence, then we've gone to med technology, and this is security. So these guys have a couple of divisions. One is the technology division, which is about there's a lot of buzzwords in this, so I'll try and break it down, but fiber optic intrusion detection technology. Basically, they try and allow their customers to determine if there's been a breach of their perimeter, if there's been a breach of their pipelines, for example, if you're a gas network or something like this. So if you want to know whether someone has intruded in on your assets, these are the kinds of guys that you might want to speak to as well. So technology, it's about 2/3 of their profit. Well, about half of their sales, 2/3 of their profit. So this is the higher margin, faster growing potential area, I should say, of their business. And then the other part of their business is a services business. Now, these guys ship things like banknotes around from mints to banks, things like gold from the gold refineries to the vaults that they ultimately get stored in. They'll even do the transport of high value works of arts, for example. So I'm sure you guys know, with transporting all your incredibly high valued assets around the place, these are the guys that you might want to call to get that done. So it's kind of like an armor guard kind of service, but for central banks and gold producers and these kinds of things. So another one that popped up on the Strawman community, which I wasn't aware of until recently. Now it's ranked number 16th amongst all of our members. Again, a pretty small company, $100 million market cap. Revenue here has tripled in the last 3 years, and they have swung recently into EBITDA positive. So on an operating basis, excluding depreciation, amortization, a few other things, this is a profitable business, and they're only trading at 6 to 7 times that EBITDA level. So for those that are not in the know, it's not exactly a demanding valuation for a business that, as I say, has tripled its revenue. I should caution your viewers that this is a business that is likely to experience pretty lumpy results here. They had a huge contract win with the Indian Ministry of Defense a few years back. You know, they've got to replace that once that's going to be completed, which will be soon. So you'll have these big contracts come in, cash flows will fly up, and then they might it might not just be an even, consistent runway there, but the opportunity looks pretty interesting. They've got some new products in the work. There's a strong tailwind in terms of the security sector there as well. So I think, yeah, good opportunity, good runs on the board, and not too demanding a multiple. So another one to watch.
Nice, Andrew. Well, thank you for your time. A reminder to everyone in the Equity Mates community that this is all about the watch list. By no means is it a buy, hold, or sell recommendation. But Andrew, are all three of those stocks on Strawman at the moment? I imagine there's some further research that our guys can go and look at and follow some of the other Strawman men?
Yeah, absolutely. They're all, well, we cover the entire market, but there's a lot of research on those particular ones. And just to your point there as well, Bryce, I mean, I can't emphasize this enough. It's really easy to borrow an idea off someone, but you can't borrow the conviction. So, you know, there's no replacement for doing your own research and becoming familiar with the stock, because when things get scary, and they're likely to at this end of the market, you know, conviction's the only thing that's going to see you through all of that kind of stuff. So do your own research. But yeah, go to Strawman and see what other people are saying for sure.
Nice.
Well, Andrew, if I could borrow conviction from anyone, I would try and borrow it from you, because I love to see how excited you get about stocks, especially stocks that I haven't heard of before. So we appreciate you coming on and sharing your knowledge with the community. Thank you. Absolute
pleasure, guys. Always enjoy chatting.
Thanks, Andrew. That brings us to the end of another Watchlist Wednesday here at Equity Mates. Absolutely do your own research, but some 3 fascinating stocks there from Andrew that we'll be keeping an eye on. So next week we'll be back with another guest, but Ren, we're closing out tomorrow with another guest.
That's it. We know that sustainable investing and ESG investing is a big topic of interest in the Equity Mates community. So we've got Adam Verwey, the co-founder and managing director of Future Super, an Australian ESG-focused super fund, joining us to talk all things sustainable investing. So we look forward to seeing you same time, same place tomorrow.
See you then.
Equity Mates, from our mates at Spaceship. Investing made easy.